Hello and welcome to another update video about Dogecoin, certainly one of the coins which is quite interesting to watch and observe at the moment. We are still holding here the support area of this possible fourth wave that we have on the radar here. So there's a few possibilities how we can count that from an Elliott wave point of view. I want to tell you which levels we must not break to still be in a potential bullish scenario here, and up to which level we can still see another wave to the upside coming. Also want to talk about the risks here, and I want to talk about why it's actually quite good what we're doing here at the moment. So generally looking at the chart, it is still, if I zoom out here, you know, from an Elliott wave point of view, this still looks like a three-wave structure at the moment. Yeah. Also the subwaves can still be counted as just a three-wave structure, which means we would have here something like a wave A, down in a B, and we now move up in a C, or even a WXY pattern, a more complex correction. For everybody who doesn't know what that means, it just means when you have a corrective price structure and there are clear rules defined, you know, you have to count the subwaves correctly and everything. But I did that, you know, you can come up with a corrective wave structure here to the upside, which does not yet invalidate any sort of bearish option, which means this could be, from a risk management point of view, that's very important to understand, this could just be a corrective wave to the upside, a so-called wave 4 peak, yeah, here or thereabout, you know, that would still be followed by a wave 5 to the upside, which would make a lower low below 4.9 cents. So that is absolutely possible still, because we haven't got clear 5 waves to the upside. I think my view is at the moment that only one more leg up here would give us those clear 5 waves. So I would like to see actually price action in the region around 18 to 19 cents. That would be a very, very good indicator that we have indeed finished a 5-wave structure, an impulse to the upside. That would then be followed by a wave 2 retracement indicated on the chart here in white. And I can't give you a definite target for that, but let's say it might be between 8 and 9 or 8 and 10 cents. Yeah, a target in a so-called wave 2 correction, which would then be a possible entry point, a long entry point, because this is a support zone that comes down quite far, and with a 1-2 setup you are able to trade the wave 3. The wave 3 is normally the most the wave 3 is normally the most bullish wave in a wave pattern, so the wave 3 would go up here. Yeah, again, can't really specify a key target for that because it's we haven't seen the wave 1 high, we haven't seen the wave 2 low, but I think it would be in the region maybe around 25 to 30 cents, that wave 3, maybe even a bit higher. And that is normally the wave you want to be in. And when we get that wave 2 retracement, which is normally quite strong, you can also set the stop loss quite tight because you're very close to the low, the previous low, and you are able to get into a wave 3, which is normally the most bullish wave. So again, does it mean it has to work out? No, of course not. But it's all about assumptions in trading. It's all about planning your trade ahead, and it's all about low risk, high reward. And those 1-2 patterns in Elliott wave, they are the best patterns you can get. And they are the patterns that work out most of the time, and they are the patterns that offer you the lowest risk and the highest reward ratio. So therefore this is extremely interesting for me at the moment, but yeah, I'm not ready yet to call a bottom in because we haven't really seen the 5 waves yet, so I'm still waiting for that. We pushed a bit higher here to around 16 cents, but it was not convincing enough. So again, at the moment this could be a bearish or a bullish pattern. What I'm waiting for is confirmation, and that gives us a little bit more trust in this chart. We are still holding this support area. Why is this yellow box here? This yellow box is based on the calculation based on Fibonacci retracements. It is the area that we should not go below in a wave 4. What does it mean? It means that as long as we're holding this area, one more leg up to round about 18 to 19 cents is possible and likely. Now there's different ways how we can get there. It could be that this here, what we've seen so far, was just an ABC correction, a so-called flat pattern, an expanded flat with an overshooting wave B as part of that wave 4. A wave 4 is a corrective wave, so ABC, normally 3 waves. That's possible, and then we should ideally go once more below the low of the wave A, as long as we're holding the 10-cent level, that's all fine. There's also a variant where I count this as a so-called running flat, where we make a higher low, don't need to go below the low of the wave A, and we go up straight away. But this is the less likely pattern, because a running flat is you see it less often than an expanded flat. So in all likelihood, we should get once more below the low of the wave A. There could also be the possibility in this wave 4 that this is all playing out as a so-called triangle pattern, yeah, and this would be an A, B, C, D, E pattern, yeah, where you have to stay above the previous low and you should not exceed the previous high, and then you're basically moving in a contracting triangle. And this is actually also quite positive if we do this, because it would hint that we are in a wave 4. So if we see a triangle emerging here, that would be actually quite a good, I mean, you could even interpret that as a triangle already, but that is a good sign, because being in a triangle, first of all, it's from a traditional TA point of view, you would consider that as a trend continuation pattern, which should then break out to the upside. The other point is that from an Elliott wave point of view, a triangle often happens in a wave 4, which consequently means that in a wave 4, we could still be in that wave 4, right? And that means that we should see a wave 5 pump afterwards. Now, again, all of that is possible as long as we stay above the 10-cent level. If we take the triangle option here, yeah, if we pull that card, we need to actually stay above the 11.1 cent level, because we need to stay above the wave A low to make it work. And yeah, then to the upside, breakout point for me would be sort of in the region around 15 cents. It's not easy to specify because of those wicks here, but I would say sort of in the 15-cent region, maybe already 14.5 cents. Yeah, when we get above that level, that would be a breakout signal that we are already on our way in wave 5 into the region of 18 to 19 cents. And then I'd be looking forward for a wave 2 correction to the downside. Should we come down already now, then it's the price action that counts. Then I would want to see if we are going to hold the 78.6 retrace. So we would then have to assume from a bullish point of view that the wave 4 already bottomed here. The wave 5 was already in here at the top of around 16 cents. That's not my primary expectation, I have to tell you that, yeah. That wouldn't be ideal, because the wave 5 would be too short. I would then rather prefer that we are actually in a bearish pattern. But then it is the price action that counts. You know, the waves can be interpreted different ways, of course. They can give you hints, they can give you trade setups, but it really is the price action that counts. So if we say, okay, maybe the high was already in, then the level that definitely needs to hold is the 7-cent level. Okay, if we go below 7 cents, if we come down now and go below 7 cents, I think we have a high likelihood of also breaking below 4.8 cents. So really, in summary, what it means, to really confirm a further breakout to the upside and make it more likely, give us more trust into the chart and the upcoming wave 2 correction, to trade into this along, we need to see a wave 5 first to the upside into the region of 18 to 19 cents. That would be ideal. Coming down now wouldn't be ideal, would increase the risk of a breakdown and would increase the risk of going down below 4.8 cents. But here we have still one chance, and we need to hold the 7-cent level. Then we could already be in a 1-2 setup. But yeah, to give more confidence in a following trade, I would like to see that leg up and then come down and then go up in the third wave. Okay, that's my update about Dogecoin. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.